Hello everyone, this is Dr.P.Syamala from the Department of MBA, IB, Acharya Nagarjuna University. Coming to today's topic, we are going to study about the limited liability and piercing of corporate veil. Before going to study about piercing of corporate veil, we have to know about limited liability. What is a limited liability? Okay, then only we can understand about corporate veil and piercing of corporate veil. In this class, we are going to study about what is a limited liability, what is corporate veil, and piercing of corporate veil. Okay. So coming to limited liability means we all know liability is limited to that extent. Okay, so that is known as limited liability. It means that the liability is limited to the amount invested in that particular company by the shareholders. Okay, so to that extent only they will be responsible. Those persons will be responsible to that extent only if at all the company undergoes any insolvency. Okay, so we can say that it is a legal structure that limits the extent of an economic loss to assets invested in an organization. Okay, it is statutorily created right with state business laws setting the requirements that an entity must meet to qualify for limited liability. It means that if we want to say in one sentence, a legal structure, okay, whereby the shareholders or the directors are legally responsible for their company's debts only when up to the value of their shares only, of their investment in that company only. Okay, not beyond their investment, they are not going to be liable. So their liability is limited. Okay, for example, if a shareholder, okay, he purchased 10,000 of shares. Okay, a person purchased 10,000 of shares in so and so in a company, for example, in company A. So if at all after some time, if at all the company undergoes the company becomes insolvent means, okay, so this shareholder, primarily the assets of the company will be taken off, okay, under the by the creditors. Okay, but even though uh, the amount should be recouped by the creditors means, okay, so the shareholders assets will not be liable, but this shareholder will be liable to this 10,000 extent only. Okay, because he purchased 10,000 shares in the company A, he is liable to this amount only. He is liable to 10,000 amount only if at all the company becomes insolvent. Okay, so in that time, it means that the liability is limited to this part of amount only. So it is applicable to the directors and the shareholders also. So that is known as the limited liability. Means it protects the limited liability, means the company law gives this limited liability that it protects shareholders' personal assets from losses and debts of the company. Okay, even though the company went into losses, it has to pay more debts. Okay, even though company will be liable but not the shareholders. Okay, only shareholders, to what extent they are liable, to that extent only the liability will be paid. Okay, so limited liability means it is a business ownership structure that protects shareholders personal assets from losses and debts. Okay, a liability will be limited to the amount they invested in the company. They are accountable to that to their investment only. Okay, up to that only. Okay, so if we see under limited liability, there are three types of limited structures. Okay, so one is limited liability company, which is familiarly known as LLC, and another one is LLP, which is known as limited liability partnership, and the other one is corporation. Okay, so what does limited liability company means? Limited liability company is a legal corporation owned and managed by the members. Company means it is formed by members. Okay, so those members may be individual members, partners. Okay, or else companies. Okay, two companies may form into a company. Likewise, okay, so a limited liability company means it is owned and managed by the members, individuals, partnerships, companies, etc., and members' interest and liability are restricted to capital invested in the business. Okay, so company means it is formed with group of individuals or partners or companies. Okay, so in that company, okay, how would be the liability if at all the company went into losses, or if at all the company becomes insolvent, means then the members of the company has to pay. Okay, but to what extent they have to pay means it depends upon their liability, which is dependent upon the capital invested in the business. Okay, so if at all in a company, okay, in a company there are 5 members. Okay, so each member invested 10 lakhs. Okay, so uh, each member 10 lakhs, 5 members 50 lakhs invested in a company. Okay, they form a company. Whenever the company went into losses, okay, at that time the members of the company are liable to what extent means to the extent they have invested, to the extent they invested in the form of capital in the business. Okay, for example, if we see here, if 5 persons, each person 10 lakhs have invested in the company. Okay, 10 lakhs. So to the amount of 10 lakhs they are liable, the members, each member is liable to 10 lakhs. Okay, so other than that their personal assets will not be taken by the creditors, or else the debts will not be paid by taking their personal assets. Okay, they are only liable to this extent only, because to this extent only they have invested in the company. Okay, so this is the capital investment of each member, and to that extent only the members will be liable to pay the amount. So here there is limit in the liability payment. Okay, debts payment. So limited liability company means to what extent they have invested in the company, to that extent only they are liable to pay the amount. Okay, but not their personal assets, from their personal assets. This is a limited liability company. Okay, here why we can say that here the members can be individuals, partners, companies, etc., etc. These members, in order to expand the company, or else in order to facilitate the growth of the company, they will contribute some funds to businesses also, some individual persons. Okay, so in that way also they will be part of the company. Okay, so if at all the company be insolvent means, so they also will be liable to the uh, creditors. Okay, but to what extent means to what extent they have invested in the company, to that extent they will be liable. Okay, so this is about the limited liability company. And if we see about LLP, okay, limited liability partnership, it means that it is a partnership where partners are not obligated to cover business debts using personal assets. Okay, means Here they are not obligated. Partners. LLP means limited liability partners. So partners are not obligated here. They are not obligated to cover the business debts, okay, using personal assets. But to what extent they are liable means to the amount they invested in the business, okay. To this extent only the partners of a company are liable to pay the amount, okay, but not from their personal assets. So this is the limited liability, okay. So limited liability means either it may be limited liability company or else it is limited liability partnership, okay. The liability will be limited. To what extent they have invested in the company, to that extent only they are responsible to pay the amount, okay, but not from their personal assets, okay. And now coming to corporation. So we have already studied about corporation, okay. So under corporation it is also formed by few members, okay. So corporation is a legal business entity where shareholders financial obligations are restricted to the extent of their investment in the business, okay. So under corporation there will be shareholders, okay. So we all know shareholders are the owners of the company. So being owners of the company means are they liable to the unlimited amount means no. Unlimited liability cannot be seen here on the shareholders, on the part of the shareholders, okay. So financial obligation towards shareholders is restricted to the extent. To what extent means to the extent of their investment in the business. For example, if a shareholder buys 1 lakh shares means his liability will be to 1 lakh only to pay, okay, if at all the company undergoes insolvency. Or else if shareholder purchases 10,000 of shares in a company means he is liable to 10,000 shares only, okay. So if the company is in losses means, so those losses or debts should be paid by these shareholders also, but to what extent means to the extent they have invested in the company, okay. So here we can have the concept, we can understand the concept that limited liability means to what extent they have invested either in the company, either in the partnership, either in the corporation. The liability will be limited only. Their personal assets will not be taken off to pay the debts of the company. Here company is different and members are different, okay. We can see here that company is different and members are different, and company's assets will be taken off in case of insolvency, okay. So even though the assets are not sufficient, okay, so these persons if at all if we take shareholders means, okay, so the amount they have invested in the company, to that extent only they are liable, okay. So limited liability means to what extent they have invested in the company, to that extent only they are liable, but not beyond that, because or else their personal assets cannot be taken, okay. So this is about the limited liability. And if see, for example, I have given here example regarding this limited liability, okay. So ABC is an limited liability partnership firm, okay, with an equity base of 12,000 amount, okay. So it is owned by 3 partners, A, B and C, with an ownership ratio of 2:1:3, okay. So A 2, B 1, C 3, 2:1:3, and firm has taken loan of 30,000. Initial amount is 12,000 and they took loan for 30,000, okay. Next, the firm was charged with non-payment of interest, okay. So interest has not been paid by the company, the firm, and in accordance with the company law, okay, whenever it has not fulfilled the duty, it has not discharged its duty regarding this payment of interest, then at that time only the firm will be dissolved according to the Companies Law Act. Okay, so the partnership was dissolved to repay the debt. So whenever the firm dissolved to repay the debt means, how could the amount be given to the creditors, or else the person who lent loan to the ABC company means it depends upon the ownership structure. That is, the ownership liabilities were limited to 12,000 only. Why? Because the amount here is, the equity base is here 12,000. Okay, and their ratio is 2:1:3. So on 12,000, A should pay the amount, that is 4,000, means 12,000 into 2/6. Okay, because here the ratio is 2:1:3, so 6. So 4,000, 2,000, 6,000. Okay, totally this amount is paid. Okay, for, and the remaining balance will be in 30,000. Okay, 18,000 will be remaining, but this 18,000 cannot be taken from the A's personal assets or B's personal assets or C's personal assets. Okay, it is marked as bad debts in their accounts. Okay, so how the lender tries to recover this 12,000 means, it depends upon the liabilities of the owners, that is on this ratio only. And what about the remaining amount, that is 18,000 in this 30,000 means, okay, it will be considered as bad debts in the lender account. Okay, so this is about the limited liability. So if we go for piercing the corporate veil, so first of all, if we are going to study about piercing the corporate veil means, we have to know what is a corporate veil. Okay, then we can go for piercing the corporate veil. So first of all, what is a corporate veil means, we will study this doctrine of corporate veil under company law. Okay, so the doctrine acts as an exception to the concept of a company being a separate juristic entity. Okay, this piercing concept, lifting or piercing the corporate veil, means an exception to the concept of a company being a separate juristic entity. Okay, so we'll discuss further. Now, if we see in India, the Companies Act 2013 is the umbrella act to regulate companies and all types of related compliances. Okay, so all the company related aspects will be studied under this Companies Act 2013. According to Section 2, subsection 20 of Companies Act 2013, it defines company. What does company means? Company incorporated under this act or any previous company law. Why? Because before Companies Act 2013, we have many Companies Act. Okay, so any previous companies law, or else the definition given under this section 2 to subsection 20 companies law, any company incorporated comes under this Companies Act, which means that a company is an artificial person which is created by law, which has separate legal entity, perpetual succession, common seal, and limited liability. These are the characteristics of a company. Okay, so in order to form a company means, it should be a separate legal entity. Separate legal entity means company, this is company A. Okay, and here there are members of a company. This is company A. Okay, so company is different, members are different. Okay, So that is known as separate legal entity. If at all the company undergoes any losses means, okay, company is responsible but not the members of the company. Okay, the members of the company are formed only to do the activities in the company, as the company by is an artificial person. Some persons need to lead the activities in the company. Okay, so that is why there are members, but company means company is a separate legal entity. We can sue on the company regarding certain grounds, okay, or else company also can sue. Okay, so it is treated as a separate legal entity. Company means it is different from members. Members are not liable for the company acts. Okay, company itself is responsible for the acts of company. So that is known as a separate legal entity. So this separate legal entity plays important role in this piercing of corporate veil. Okay, so the theory of corporate veil fully depends upon this separate legal entity concept only. Okay, as I said before, separate legal entity means company is different from members. Members are not responsible for the acts of the company. So therefore, company is treated as a separate legal entity. Company can be sued and company can also sue on the others. Okay, so this is the companies act under separate legal entity. So if we see about corporate veil, so corporate veil is a legal concept whereby company is recognized as a separate person. Okay, under corporate veil, what does corporate veil means? It is a legal concept where company is recognized as a separate person. Okay, so that is a corporate veil. Separate person means if at all there is any act done in the company, company will be responsible but not the members of the company are responsible. That is done in this case, that is known as corporate veil. There is a famous case, Salman versus Salman. In that case, the judgment has given, as company is treated as a separate legal entity, the person of that the members of the shareholders of that company are not responsible to the company's act. Okay, so here the concept is based on separate legal entity. For example, if any of the director uh, in that company made any mistake also, okay, the company went to losses, person will not be responsible, the company will be responsible. Okay, so here the term corporate veil protects the members of the company. So that is the corporate veil. As company is treated separate legal entity, members are not responsible for the company. Okay, company is solely responsible for its acts. So this doctrine, corporate veil, this protects the members of the company from the liability connected to the company's actions. Okay, so the corporate veil concept implies that if the company incurs any debts or contravenes any laws, okay, it contravenes any laws means it acts beyond the provisions of the laws means, so debts or acting beyond the laws means the members should not be held liable here. Okay, for those errors, as the company's own identity is different from the members. Okay, means here company only is liable for any uh, uh, acts or else for any debts. If at all the company incurs any debts, company only responsible, or else if at any contravening any laws, then also company only responsible but not the members of the company. Okay, so that is the corporate veil, means it completely treats company as a separate legal entity and members as a separate persons. So the corporate veil acts as a corporate insultation to the members from the acts of the company. So the landmark case, as I said before, Salman versus Salman Company Limited was the first instance when the concept of corporate veil was established. Okay, so this case established that the company has its existence different from members. Due to this, even though shareholders hold virtually the entire share capital, even though the share capital is with the shareholders, only 7 shareholders will be there. The shareholders has the amount with them, even though the share capital with them. A shareholder cannot held liable for the acts of the company. To what extent they are liable means to the extent of their investment only they are liable, but personal assets of that of the 7 members in that company, they are not responsible personally. Okay, their personal assets are not taken off, but only to the extent of their investment only they are liable to pay the amount. So that is the case of Salman versus Salman. Okay, so this is a landmark case regarding the separate legal entity of the company law. Okay, so this case only raised this corporate veil, means protecting the shareholders. Okay, the only company is responsible but not the shareholders, so protecting the members of the company from the liability connected to the company's actions. And the whole concept of corporate veil is based on this theory of separate corporate entities. The concept of corporate veil makes sure that for the acts of the company, the liability is limited only to it and does not advance to the assets of the shareholders. Okay, assets of shareholders are not taken, only limited to the liability. Limited liability means the investment that they have made in the company. The shareholders remain hidden under the veil of all the liabilities and they only deal in the name of the company. Okay, so veil is nothing but all you know. For example, in Christian marriages, if we see the bride will be wearing a veil. Okay, so that is known as a veil. But here if we see in company means the veil, under that veil the members of the company will hide. Okay, and if at all any mistake done by them, by the members of the company also, under that veil only they are being protected through this law, through this corporate veil. Okay, so if we see piercing the corporate veil, till now we have learnt about what is a corporate veil. Okay, corporate veil means protecting members of the company from the liability connected to the company's actions. Okay, if we see what is piercing the corporate veil means, okay, under the veil the members of the company, under the company's veil the members of the company, okay, even they are doing any mistakes intentionally also, they are being protected. Okay, but piercing the corporate veil means disregarding the corporate identity and paying regard to human instinct of looking beyond the company as a legal person. Means here in certain cases, okay, that veil is taken off, that veil is not regarded, company is not taken into consideration, people are taken into consideration, the members or the person who is responsible, that person is responsible. Okay, that person will be liable. Okay, so if you are an owner of a corporation, then you know that one of the greatest advantages to the business model is the personal liability protection. Okay, so this personal liability protection, in some cases, in certain circumstances, the courts will find that this liability protection should not apply and it will pierce the corporate veil. Means, thus it allows the debtors or plaintiffs to recover damages from the personal assets of the corporative owners as well as the corporation itself. Okay, so generally this corporate veil may be pierced if the corporation was just a shell for the owners, individual acts where the owners intentionally use their business to commit a wrongful act in such cases, this corporate veil will be pierced. Okay, so here we will not protect the members of the company. Okay, this piercing the corporate veil is a matter of state law, and each state has its own precise rules for applying this doctrine of piercing a corporate veil. Okay, so if we see here, the courts ignore the company. If we want to say in just a word, courts ignore the company and concerns themselves, the members of the company, okay, directly with the members or management of the company. This is called the piercing of the corporate veil. Okay, so in certain circumstances, the protection from limited liability will not be considered. Here, companies will be ignored. The persons under the company, or else the members of the company or management of the company will be considered. Okay, so this is called as piercing of the corporate veil. So piercing of corporate veil takes place when the case involves a question of control rather than ownership. Okay, so this involves mostly in part of control. Okay, so the court will pierce the corporate veil in a case when the owners, directors, or shareholders have committed fraud. Okay, so there are certain exceptional cases where corporate veil has been taken off. Okay, piercing the corporate veil will be considered, means disregarding the company, disregarding the corporate identity, and paying regard, taking concern, considering the persons, considering the humans, instead of looking beyond to the company as a legal person. Okay, so if we see here, what are the cases that we can consider, that the courts consider to lift the corporate veil. Okay, so if we see, first one is to determine the character of a company. So there are certain situations where courts need to find out whether the company is a friend or a enemy. Okay, so although a company is an artificial person, we all know company is artificial person, it cannot possess any emotion or consciousness, but the employees working in that company, they are considered by the court, if at all, if the company affairs are controlled by individuals from an enemy country. Okay, so those persons are taken into considerations. Okay, and they will scrutinize the character of those individuals. So the court may be willing to pierce the corporate veil, okay, unless they find a threat to the public interest. Okay, in such cases, definitely in where the when our country uh, maintains with enemy country, okay, any contracts, any deals with other country. Okay, so in that grounds, on that grounds, okay, the individuals will be responsible but not the company. Okay, so for this also we have a landmark case like Daimler Company Limited versus Continental Tire and Rubber Company. Okay, so this is a England company. Okay, Continental Tire and Rubber Company is an England company, with one person is England person and the other persons are the shareholders or the members of the company are Germans. Okay, so while they are doing their business, they went into contract with this Daimler company. Okay, so when they went to, or else when they entered into contract with the Daimler company, and whenever they want to pay the amount to this Continental Tire and Rubber Company, they said that their contract is void. Why? Because it comes under the enemy country. Okay, so they said that all are Germans only. Okay, and this is an England company, and the Daimler company stated that even though it is an England company, shareholders are German. All the shareholders are German shareholders, except only one person is England, from England. Okay, so even though Daimler company stated those aspects, Continental Tire and Rubber Company also stated that we also were formed in England, and a company is also a separate legal entity. Okay, we can have a contract will be not a void contract. Okay, so in this case, the judgment has given that however the company is separate legal entity and the company is formed in England and should be an England company, but enemy character are determined by the nationalities of shareholder. Okay, it means that the character of a company is taken into consideration. Character of a company means the individual persons, the nationalities of shareholders are determined. Okay, so the judgment is given like that. However, company is a separate legal entity and company formed in England and should be an England company also, but enemy character are determined by the nationalities of shareholder. Okay, so lifting of corporate veil has been done disregarding the company as a separate legal entity. Means here in this case, they have not considered the company, this Continental Tire company, as a separate legal entity. Both company and members all are one. Okay, so it pays regards to actual reality, and company and its members are therefore regarded as one. Okay, so here this is the case regarding the character of a company, determining the character of the company. Okay, so whenever the case arises that whenever any company enters into enemy company means, okay, so enemy countries company means, so in that case the judgment will be given depending upon the nationalities of the shareholders of that company. Okay, depending upon that they will give the judgment, and in that case they will not see company as a separate legal entity. They will consider the members of the company and company both as same. Okay, next, to protect revenue or tax. Okay, so whenever the members of the company tries to evade tax, okay, dodging the tax, so in that cases, okay, they will treat the company and the members of the company or management of the company as same. Here they will not treat the company as a separate legal entity. Okay, so the veil may be lifted when the corporate entity is used to evade or dodge the tax. So whenever the corporate entity uses to evade the tax, in such cases disregard the company and consider or regards the members of the company or management of the company. Okay, and also in cases like they will create shell companies to circumvent the proceeds and assess in just using corporate identity to dodge the tax payable on huge income by way of dividends and interest. Okay, so if at all any company is paying dividends, okay, so in order to not to pay those dividends, it will uh, create new shell companies. Okay, they will not be in existence, but it will show on books only, shell companies. Okay, so why? Because they will not pay taxes by showing these shell companies, that they are not getting any profits or dividends on that. Why? Because they will transfer those to shell companies, and there they will show no dividends or any profits in that shell company. So here they will do this type of creation of shell companies. Why? Because to evade the tax. Okay, so all these comes under protecting the revenue of their companies, okay, and evading the tax. Okay, so in this case also the company and the members of the company will be treated same. Here company will not be treated as a separate legal entity. Okay, so all members of the organization, they are liable. Okay, so if trying to avoid a legal obligation where the members of a company may establish another subsidiary with the motive to evade certain legal obligations, so in that case, okay, piercing corporate veil allows the court to translate the actual transactions. Okay, so for example, avoiding legal obligation, any obligation of a company, if at all it tries to avoid that legal obligation, okay, in such cases also members are responsible but not company. Okay, so for this example, workmen employed in Associated Rubber Industries Limited versus Associate Rubber Industries Company. Okay, to that company and versus the workmen in that company. Okay, company, in this case company tries to avoid legal obligation, which was a bonus. Okay, it has to pay bonus to the workmen in their company, but it tries to uh, avoid their obligation. It is a legal obligation. Okay, so in such cases the court unveiled the true intention and ensure the company should compliance the legal obligations. Okay, it has to do its obligation. Okay, it has to perform its legal obligation. The court has lifted the veil, corporate veil. Okay, and another one is forming subsidiaries to act as agents. Okay, so there may be some cases where companies forms to act as an agent or trustee for its members or another company. For example, if any there is X company, okay, for that X company they may create another company as an agent, which is considered as a subsidiary company. Okay, so the company, the principal becomes liable for the company's actions as subsidiary shall be deemed to have lost its individuality to its principal. So landmark case law in this point was Mercantile Transport Limited versus British Transport Commission case. Okay, so this is another case regarding this subsidiaries act. Okay, they are forming the company, subsidiary companies, as agents to the principal companies or else parent companies. Okay, and coming to the last one, a company formed for fraud or improper conduct to defeat the law. Okay, so the motive of the incorporation is illegal, okay, or else fraud or else improper. Okay, for that, in such case also company is treated as separate legal entity. Some company and the members of the company are treated as similar. Okay, so company is not treated as a separate legal entity. Okay, so for example, to defeat or circumvent the law, to defraud creditors or to avoid legal obligations, in such a case the court may lift the veil and identify and take action against the actual owner. Okay, means here we are not regarding or taking into consideration the company, only the mistake who has done or else the person who is responsible for the fraud or else improper conduct. Okay, or else who doesn't follow the legal obligations, so that person will be liable. Okay, so we can say that the court will pierce the corporate veil finally in situations where the owners, directors or shareholders commit frauds, fail to follow the corporate formalities, or have acted inappropriately. Okay, so in such cases we can see, okay, piercing the corporate veil. So basically we can say that piercing the corporate veil takes off the distinction between the owners and the business. Okay, the distinction is stripped away. So the owners or the shareholders working on behalf of the company become personally liable for the financial condition of the business, like as they would be if the company was a sole proprietorship. Okay. So if we see example regarding this piercing the corporate veil means ABC Limited purchases shares of XYZ. Okay, Limited ABC. It purchased from this company. Okay, by investing 20 lakhs, and the dividend received on these shares reflects in the P&L account of that company. Okay, of this ABC company. So further, the workers of the company receives annual bonus on these dividends. Okay, so and this amount is given to these workers of this ABC Limited company. Why? Because from this company the profits are coming, so the dividends are received on these shares. Okay, and it is shown on the P&L account, and as a result workers of the company receives annual bonus, right? Now a few years later, ABC Limited transfers the shares of XYZ Limited to LMN Limited. Okay, from XYZ to LMN. Okay, so this LMN is owned by this ABC only. This is not a separate or another company. This is a subsidiary to ABC Limited. Okay, so post transferring of the shares, the dividends do not reflect in the accounts of ABC Limited. Okay, so as they are receiving from this company the dividends, those are transferred to post transfer to this subsidiary company, that is LMN Limited company. So we cannot see any profits or dividends in the company now. Okay, so this leads to reduction in overall bonus amount figure. Means if this ABC Limited company, we cannot see these dividends in this company accounts. Okay, so whenever we cannot see these dividend amount in this company's account. Okay, so the workers are the persons who will not receive the any bonus. Okay, why? Because reduction in the overall bonus, or else reduction in the P&L account. Okay, so intentionally ABC company, it doesn't want to give bonus to the workers, so that is why it has created a subsidiary company, or else to its existing subsidiary company, it has transferred this XYZ Limited company's shares. Okay, so if we see now here, in this case the court will observe that the question is ABC Limited legally allowed to do so. Okay, for this, in this case the court will observe that LMN Limited, okay, which is subsidiary for ABC, has no assets of its own. Okay, so except those transferred to it by ABC Limited. So LMN Limited has no business or income, just they have created intentionally to avoid the bonus. Okay, so for that purpose only they have transferred their shares to LMN Limited. Okay, so hence ABC Limited has created a subsidiary and transferred shares to it with the intention of reducing the amount paid to its workers as bonus. So what does the court do now? Means the court will opt for piercing of corporate veil. Okay, and conclude that ABC Limited has created LMN Limited with the intention of avoiding its legal obligation. Okay, hence court avoids separate existence of subsidiary company. So here having separate subsidiary company is not considered by the court. Okay, so this is a case regarding this piercing of the corporate veil. Okay, so this is all about the limited liability and what is a corporate veil and piercing of the corporate veil. Okay, the basic difference between the corporate veil and piercing of corporate veil is nothing but corporate veil protects the shareholders or the members of the company, directors of the company. And coming to piercing of corporate veil, here it will not protect the members of the company under the company veil. It treats company and members both are same. There is no distinction between company and members of the company. But coming to corporate veil, company is different, members of company are different, and there the members of company are nowhere responsible to the debts of the company or else any losses of the company. Only company is liable to its acts. Okay, so this is all about the limited liability, corporate veil and piercing of corporate veil.